Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So remember, the primary trend in a downtrend is going to be down. But these counter trend rallies to where we have these nice rallies here is going to give you an opportunity sometimes to take these counter trend rallies in the opposite direction. Okay? All right. And now, of course, we're very close to the bottom again. We're close to testing those lows. So it's a trending situation for sure. The New Zealand dollar, really quick, we had a potential for a bull flag. It's almost the same as the bull flag we had when the dollar broke out against the Swiss franc in 2008. You have two choices here. You can either buy when price retests the bottom line of the bull flag, but you'll tie your money up if you happen to buy at that point. So maybe you want to buy the strength. You can buy calls a little bit out of the money, just above the upper line, and if there is a breakout, you shouldn't pay too much as far as volatility goes, and that was the opportunity. We can see that it actually did break out of that bull flag, and once it broke out of the bull flag, it rallied pretty strongly. So it took a while for that bull flag to work out. So if you didn't have your money tied up in the options at that time, no problem. You didn't worry about data. And you had the opportunity to buy before volatility really kicked in. And again, didn't go very far, so it ended up being just like a trading range situation. And we broke through the support, and we're actually now, with the New Zealand dollar, we're testing the daily support on the next chart. So there could be a bounce opportunity for the dollar versus the New Zealand. But of course, it may just be a little counter trend shorting opportunity. If it rallies up to this 140 resistance, you can go short. But if it breaks through the lows just below 130, it could be another leg down, and the dollar could start to weaken more against New Zealand. Okay. This Swiss franc, I don't know what to say. We came down to support last year around this time. We flopped around for a trading range situation. We had a potential breakout going into December and January. You also had an opportunity for a pullback to the origin of the support at the bottom there. You got your pullback entry at the beginning of the year. You also have your breakout entry. You've got moving averages that are sloping higher and getting ready to cross. Even if you're bearish on the dollar, your chart is saying, look out. This is a possible breakout getting ready to happen. We broke above the resistance, and we rallied right into some nearby resistance. Now, that nearby resistance wasn't that far of a sell-off, but remember the strategy I said to where if you wanted to, you could possibly sell some calls above there. You could sell a spread. You could also do a pullback to the support if you don't have a position, as long as you close above that 30 rising moving average, the lower moving average. And you could also buy if price makes a new high and continues higher. So you have some opportunities depending on if you have a position or if you're flat. And it broke out of there pretty quick. Again, the dollar caught a bid because of fear in the markets, the May flash crash, everything that happened after that. But on May 31st, where does it rally? It rallies right into the area where it topped and dropped in the beginning of 2009. So on that candle, it closes as a potential reversal candle. And on 531, if you're long, you want to trail your stop to the low of that trading range. If you're not long and you're looking for a position, I'm looking at that point for a break of support and a possibility to open up a bearish position. And of course, the simplest bearish position would be to buy puts. Selling call spreads is bearish, but how do I participate on the downside? Use the money that I collect from selling the call spreads to buy some downside puts, because rallying into resistance like that is usually where the top of the market happens. A couple of weeks later, and it's off to the races. And of course, if you were going to tell me that the dollar was just going to collapse against the Swiss franc, I'm not positive that's going to happen. But at least for sure, I'm bearish once it rallies into resistance, and that's a pretty big move from there. And there's a lot of fundamental reasons for that. Because the euro is still intact as a currency. A lot of people have been trading the Swiss franc, which is Germany's largest trading partner, as a way to trade the strength of the German economy. And when the euro was weak at around 120, then their exports were just smoking. So the currency traders all decided to jump on board long Swiss franc, and they're using the dollar once again for carry trades. And here we are making a brand new low, an all-time low, no support below. And if it bottoms out here and it goes sideways for a period of time and the rest of the dollar index rallies, then you might have some kind of a snapback rally here. Swedish krona, double bottom back in the beginning of November last year. That was our trading strategy. If we wanted to, we could buy some December calls. We could pretty much do anything we want. It all depends what you want to do. If you want to trade a straddle, you want to trade just a regular call option near support. Not so good on selling any put spreads down there because I really don't have any solid support at that point in time. But it broke out from that trading range, and once it broke out above the trading range and hit the target, it rallied because it was part of the basket. It gave you a pullback opportunity in actually on it's St. Patrick's Day. So that was the next pullback opportunity. And again, I've illustrated a couple of these opportunities where you make a support level, you rally, and then you manage to pull back to the origin of the rally. You can buy calls at that point. You can target the highest high before the retracement. If you get a situation like this where it explodes higher, look out for a potential top. And around the time that the rest of the currencies topped out, such as the Swiss franc, we're already preparing for a potential reversal here. But look, amazing. The movement of the dollar versus the Swiss franc, the dollar against the Swedish krona, and the dollar against the yen has just been very, very strong to the downside. So we're through all the support down here. And the target for the short trade from the entry up there on 531, we hit the first target. And right now, again, if the dollar basket rallies, I'm sure this one will have some kind of a counter trend rally. So plan for a breakout at least above the high from 2 weeks ago before you're thinking of going long. And give the moving averages a chance to pull down there because it could be some sideways trading for the next couple of months.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.